Good evening, accounting students. Mrs. Martin here. We have successfully finished Chapter 11, so now we are heading to Chapter 12, and Chapter 12 is about employee payroll and preparing payroll records. So we're going to talk about a lot of different things, but I just wanted to quickly, I know we can't really have a discussion, but I want you guys to think about a few things. So if you have a job, or if you've had a job, think about where you work, what you do, what you're responsible for, and think about how you get paid for those things that you're responsible for, right? Do you get, like AJ for an example, at your bar, do you get a wage and then tips? Do you just get strictly an hourly wage? If you work over 40 hours, do you get overtime? Then think about, okay, I started this job. I know I'm going to work 20 hours a week and get paid $10 an hour. My check should always be $200. Did you get your check and realize, oh man, I'm not getting as much as I thought I was? Why? What comes out of that check that you weren't thinking about when you got your first job? Taxes, right? There's state income tax, there's federal income tax, which we will talk when you take personal finance. I know as an AJ you've already done it. Anna, when you take personal finance, we'll go way into detail with taxes. But Social Security tax, Medicare tax. Now, federal income tax and state income tax, if you make under a certain amount, you can be exempt from those. But what about Social Security tax? Can you be exempt from those? No. Okay, so there is so much that goes into payroll. Now think about if you were working payroll for a company and all the stuff that you had to keep track of, right? To make sure that you're following the laws, the tax laws, you're making sure you're following the laws with respect to what needs to come out properly out of people's payroll, out of their payroll deductions or their income. So there's a lot that goes into it. So what's going to happen, and I just want to go to 12.1 here, because that's all we're going to go over tonight. So we're going to talk about calculating employee earnings. So Chapter 12 is going to introduce payroll accounting, and then of course we're going to continue on with that in Chapter 13. So the objectives of 12.1 are to explain how employees are paid and to learn how to calculate employee earnings. So I'm going to head over to the PowerPoint. There's lots of terms in this chapter, so I'm going to go slow, but there are lots of terms, so I just want to make sure that we're understanding them. Okay, so the amount you're paid, if you're an employee, the amount you're paid for every hour you work is a wage, okay? And under federal wage and hours, under the federal wage and hour laws, hourly employees must be paid for every hour they are on the job. So those employees are often fixed, like if owners or managers can be exempt from that rule, but sometimes they're often paid like a fixed amount regardless of the number of hours they worked. So now that's a wage. Fixed annual sum of money divided among equal pay periods is called salaries. So as a teacher, I know that I have a certain salary, and that's divided by 12 months, and I get the same amount every month. Okay, salary. So whether I work 20 hours, and it's a little different in school because we have contract days, but let's just say in a normal period, if I work 50 hours, I'm still only getting paid the 40 hours. A lot of times, sometimes they'll let you go down to like 36 hours and still get paid for the 40. It just depends on your employer. But it's mostly if people are working over 40 hours, they don't get overtime pay for that because it's salary. Big example of like salaried employees would be maybe sales employees. So they get this base salary, and then it's a good segue to commission. They may get a commission, which is a method of paying an employee based on the amount of sales the employee generates to help compensate for the money that they earn. So it kind of is incentive for them to sell a product or have a high level of sales because they get a percentage of that back as income. Commissions are normally calculated as a certain percentage of the employee's sales. So, like I said, if they sell $5,000 worth of cars, maybe their commission is 10%, so they'd get $500 extra or something like that. Let's talk about total earnings. The total amount paid by a business for an employee's work earned by a wage, salary, or commission is total earnings. So that's everything. So if you do work sales at a car dealership and you get salary and commission, those together would be your total earnings. So total earnings are sometimes referred to as gross pay, gross wages, or gross earnings. In personal finance, we talk a lot about gross pay, and then we talk about net pay. Those are the terms that we use. So the gross pay would be what you earn before your taxes and deductions are taken out. And then, of course, net pay is what we're actually bringing home. And we'll talk more about that later. So now let's go into pay period. So it's the number of days or weeks of work covered by an employee's paycheck. So a business may decide to pay its employees every week, which would be a weekly payroll, every 2 weeks, which would be a bi-weekly, twice a month, which would be semi-monthly, or once a month, monthly. So at the school district, we are paid twice a month. So on the 15th and 30th every month, so we're paid semi-monthly. In this book, for the examples we're going to be using, 3 Green uses a semi-monthly pay period also. So the employees are paid on the 15th and then the last day of the month. So if there's not 31 days, they'd get paid on the 30th, etc. So the total amount earned by all employees for a pay period is called payroll. So if I have 5 people on getting paid for this pay period, their amounts would total my payroll. The total payroll is not the actual amount paid out to the employees, because the payroll amount paid to the employees is obviously reduced by state and federal taxes and other deductions, maybe as health insurance or dental insurance or retirement, etc. So the accounting staff position that compiles and computes payroll data and then prepares, journalizes, and posts payroll transaction is called a payroll clerk. So it gets, and I've also heard it called accounting clerk, things like that, but that's just someone who essentially is keeping track of all of this information, of all these transactions. So now let's talk about how we calculate employees' hours worked. So a time clock, you've probably heard of, is a device used to record the dates and times of each employee's arrivals and departures. So I would say the most common way, or the way that's been used in the past, is for employees to insert a time card into a machine and then it just stamps or punches the date and time on the line. So when they come in, they do that, and when they leave, they do that. It's not easy to fraud or to be fraudulent with that, because you're clocking in, clocking out. But now a lot of places are going to more of a computerized system, which can be good and I guess a little more easy to work with. For our purposes, 3 Green uses a traditional time card system. So employees earn overtime pay for working more than 8 hours. And I just want to show this here. So employees earn overtime pay for working more than 8 hours in any day or more than 40 hours in a week. So when calculating hours worked, a business can elect how to round arrival and departure times. Most places will round to the nearest quarter hour, so every 15 minutes. But it just depends on the individual company. If you're using a computerized system, it can just add them up sometimes, and then it will just round. But most places will do, I would say, to the nearest quarter hour. So in this case, John Butler, you can see on Monday, his clock out, clock in, probably took his lunch, and then clocked back in for the afternoon, and clocked out looks like he took an hour lunch. So he's working 8 hours, 8 hours. On that, on Wednesday the 3rd, it looks like he came in the evening for 2 hours, 2.5 hours. So he had 2.5 hours of overtime. So you see regular hours, overtime hours, and then it's going to total down at the bottom. So he had 88 hours, and 6.5 of those are overtime. So this was on just the timestamp system. Now here's a clock. So this just shows a computerized way of showing his hours. Shows their employee number. So how do we calculate regular earnings? So again, as I said, regular would be up to 40 hours, or up to 8 hours a day, and up to 40 hours a week. So hourly employees are calculating using time card data, and hourly wage rates are obtained from personal records. So that means every person probably is going to be getting paid a different rate, but overtime rate is always the same. It's 1.5 times. So the Fair Labor Standards Act, often referred to as the federal wage and hour laws, they are the ones who set the minimum wage and rules for the payment of overtime. So a law requires most businesses involved to pay employees at least 1.5 times their normal hourly rate for hours worked in excess of that 40 hours a week. So in our case, again, 3 Green does comply with the Fair Labor Standards Act, but our company is awesome because it goes even further and pays its employees overtime when they work more than 8 hours in a day. So the Fair Labor Standards Act just says over 40 hours a week, but we're awesome and we pay over the 8 hours because that's the typical standard work day. So if they're working over those 8 hours, I believe that they should get paid overtime. So you can see here that they had 88 regular hours, and then they had overtime. So overtime is going to be 15 times 1.5, so the overtime rate is $22.50. And so we're going to take the 6.5 hours of overtime and multiply that by $22.50 to get our overtime earnings. And then we're going to add our regular earnings of $13.20 plus $146.25 and add those together. There's a times there, but it should just be plus. Add those together and that's our total earnings. Okay, quickly, I just have 2 minutes here before my time runs out. I don't want to have to do another video. So what is a payroll? It's a total amount earned by all employees for that pay period. So whatever employees were getting paid for that pay period, that's that payroll. Identify 3 methods used by modern time clock systems to record arrival and departure. So employees can swipe their name badges, they can key in personal identification numbers, or press a finger on a biometric pad to record their arrival and departure. Most times I've just seen where there's like a computer, they put in their employee number usually, or their PIN, hit enter, click and go, and then when they leave they're gonna put that same number in, click out. My children's daycare even use something like that to timestamp when we bring our kids in, when our kids leave. Describe the overtime rules of the Fair Labor Standards Act. So anything over 40 hours a week must be paid at least 1.5 times of their normal hourly rate. If a company chooses to do more, that's awesome. Again, for our purposes, our book did over 8 hours a day too, which is fabulous. And how does 3 Green calculate overtime? Well, we just said it, but they do 1.5 times the normal hourly rate for hours worked more than 8 hours a day and 40 hours a week. Oh, 30 seconds to spare. So, sorry that was quick. It was a pretty quick little review, but it was just trying to get you an understanding of what payroll is, how do we calculate overtime hours, what's the difference between wages and salary. So, please complete the 12.1 on your own and the 12.1 application problem and put them into the upload file on Schoology. I'll be back tomorrow. Bye, guys.